Hello everybody, and welcome back to the channel. This is episode 23 of my investing journey, where as every week I share with you my weekly portfolio updates, ETF buys and sells, income progress, and how I'm building an income-focused portfolio over time. As always, this is not financial advice. I'm just sharing my real portfolio and documenting the journey, and hopefully you'll enjoy and follow along. Okay? As you can see, as always, this is behind me is my Wealth Simple account. It was a very tough week, as we will see as we go through the presentation, but we're still in the green. We're up 8.28% this year, which is, pretty good, particularly after Friday's massacre. I don't want to sound like I'm exaggerating, but it was truly a bloodbath. So yeah, so far so good. We're still on track. We're still on target. As always, I contributed my $75 by a weekly contribution. Okay, this is, as I always say, investing in the future. This is a 10-year journey. So let's see, hopefully we can keep this contribution the way it is. I won't lie to you, things are tough. There's not a week that I go to the supermarket that I come out of the supermarket with my bill thinking, did this much money really just buy me just this? So yeah. So we're going to keep up the $75 for as much as we can, for as long as we can. So let's see how it goes, right? On the trading side, well, I go out of GLCL. Even though the income, I will lose a little bit of income because of the low volumes that I have. I'm not really going to notice it. I'm still going to be up on income by the end of June. So I thought, you know what, there's no point of keeping GLCL. We should just sell it. And instead, with the proceeds of the sale of GLCL, I bought more shares into CMCL. Okay, it made sense. It made sense to do it like that because at the end of the day, CMCL it's an ETF of ETFs that encompasses all commodities and energy existing global X ETFs, right? On top of that, I also bought 2 shares of HHIS. I've bought 1 share of HYLD, 1 share of HDIV, 1 share of QDAY, 1 share of HHIC, and 1 share of SDAY. As you can see, this week was mostly, strengthening my core ETFs, my core portfolios, right? HYLD, HDIV, HHIC, instead of investing in the ones that are a little bit more volatile, right? You could really say that, this week it was another combination of rotation plus steady accumulation. I do believe I'm done selling right now. I do believe what I currently hold is probably going to take me to the end of the year unless something comes out which is more attractive and fits the bill better. Okay. On the income side, we received the first contributions for the month of June, which is very good. So I think I received a total of $44.75. Okay, that's $44.75 compared to the $37.97 I received in the same time period in May. This is a whopping 17.8% increase month on month, right? It makes me very happy. It's amazing. So my portfolio is up 8% year to date, and my contributions keep increasing. It's like the best of both worlds. Most people when you start, and if you go into Blossom or any of these, forums, most people is like, oh, yeah, I would stay away from these ETFs. You're going to lose money. They're giving you back your own money. And I'm like, well, if they're giving me back my own money, how come that I'm actually up year to date 8%? Something in that narrative just doesn't sound right. So, obviously we've been doing this for 2 years now. Well, 1 year and a half. 1 year and a half. We've been doing it for a year and a half. And I think we've been through some rough periods. Surely we haven't been through a full-fledged bear market. But I think we've been through some, rough period, and yet we're still there. Anyway, we're going to keep on walking and see where we get, right? In terms of what I just told you right now, it's like, what is the portfolio performance? Well, we were 9.53 up year to date last week. This week it went down. We're now up only 8.28%, right? Still positive year to date, still hanging there. Let's see how July, August work. Let's see how the SpaceX APO, impacts the market, and then we'll keep talking. We'll talk again in September. Still solid overall, even though it was a weaker week, still solid overall. In terms of the bright spots for this week, well, amazingly enough, 60 did pretty well. Canadian banks, up there, crushing it, just like they do. S-Day did pretty well. Amazingly enough, S-Day, which every single week is down, this week was up. Like, go figure, right? HPYB, obviously, bank did pretty well. C-Day did pretty well. HPYE did pretty well. So those were the bright ones. And now get ready, because this is going to turn a little bit red right now. In terms of the not so bright ones, pretty much everything else. Broadcom crash. Bad. Uranium crash. AMD crashed. HIS followed, crashed. CMCL crashed. QDay crashed. EC crashed. I mean, less of a crash, but crash. HYLD crash. QQCL crash. HDIF, little bit of a crash. HHIC, little bit of a crash. Canada actually was pretty good. USCL actually I would have expected it to crash more. It was a little bit of a crash, but still a crash. So yeah, I think the theme is pretty obvious. Tech heavy and growth sensitive names got hit the hardest, right? However, let's remember, we've had 9 weeks of increases, 9 weeks of growth. It's bad, but it's not that bad. So yeah. Well, so, in terms of the market update, well, what can I tell you that is that you don't know already, right? The S&P snapped the 9-week winning streak that they had. The NASDAQ suffered. It was probably hit the hardest. And the big driver, amazingly enough, was actually jobs. There was a job announcement in the U.S. market, and they increased jobs by half. I think they were expecting 80,000, and they go 160,000 or something like that. So I guess people are now going to be worried that this is going to increase interest rates, right? And as a result, everything went pear-shaped. Yeah, well, it's a kind of environment that tends to put pressure on AI names, on blue chips, leverage tech exposure, and rate-sensitive growth names, right? So I think that was pretty obvious in my portfolio, right? I think one of the things really that was pretty good was how the TSX actually held up way better. And some of the Canadian names were actually, relative winners when you think about it. So it's pretty good. That's why I'm happy that I have an exposure to the Canadian market. I think the Canadian market, even though Canada is in the shithole and we're going through a technical recession, regardless of what the government says, I think the Canadian market is actually a little bit more stable than the US market. So yeah, there was definitely a red week overall, but it wasn't total damage everywhere, okay? In terms of what I'm looking for next week, well, what am I looking for? Obviously, it's the IPO SpaceX hype, right? It's worth watching it. if the IPO hype adds up, you know, it's the way I say it is that it could have an impact of some of my ETF like QQCL, QDAY, AHIS, right? They could feel it through because of their tech exposure. But I'm not really worried about, right? For my portfolio, it's more of a sideshow than a direct event, right? My holding, most of the holdings that I have don't really have a meaningful direct space exposure. Not am I looking to have one right now. So it's something that is worth watching, but it's not something that is going to make me reposition the whole portfolio around that particular event, right? So I'm not going to worry. So that's it really for episode 23. Thanks for following along. If you could be so kind to give us a like and give us a follow. We're trying to reach 100 subscribers by the end of the year. We are at June, and I think we have 53 subscribers, so we are above the halfway. So thank you so much for everybody. And I'll be back next week for episode 24 or 24th. All right. Take care, everybody. Bye-bye. Thank you.